Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Monday, November 1st, 2010. Well, a continuation of the trend to the upside, and we can see 3 candles ago we had a new first time frame uptrend, and the day following that we had in bar chart terms an inside day, and today we've had an outside day. We're comparing the highs and lows of today with the previous day's trading, and we have a higher high but a lower low, so in bar chart terms an outside day. So the previous trend is in force, and that trend was established 3 candles ago with a higher high and a higher low. Now what's interesting here is all of this indecisive trading that we've seen over the last 1, 2, 3, 4, 5, 6 trading days. Long shadows on either the top or the bottom or both, which represent either downside price rejection or upside price rejection or both. And very small bodied candles. Very, very indecisive, nervous trading at the moment. The small bodied candles represent neither side making any decent net bullish nor bearish progress on the day between the open and the close. A very small amount. Not the sort of trading action that you want to see with a market that's trending up in a second time frame uptrend. So a lot of indecision in this market. Now, just looking at bigger picture terms, the market has now set up a double top pattern, and we can see here we have prior trending action, which is very important for any patterns, and then we have the first swing high of the pattern, we have the intermediary low, or the peak, the intermediary trough, the second peak or the high of the pattern, and confirmation of this pattern would be the market trading down below the intermediary low, which is 1172. Closing down below there would be completion of the pattern, and we would have a target, potentially the distance from between the highest peak in the pattern down to the intermediary trough, which would roughly be 1195 down to 1172, which is 23 points. So there is a possibility that this market will trade down to 1150, which will coincide with roughly levels down around the support around here, if the market does break out to the downside. And that's a big if. So just because we have a nice setup for this pattern, it doesn't mean that that will happen. We do need confirmation, and that would be a close down below that low of around 1171. And I would like to see a bearish close for further confirmation of that. So if there is a bearish candle with the market trading down below there, then that would complete that pattern, and we would have a target to it. Now, in Ichimoku chart terms, we are trading up above the cloud, so the market retains its overall positive bias. And the market is still looking overextended because we are trading a long way up above that cloud. The market's also bullish in the medium-term and fast-term timeframes because we're trading up above the Kijun-sen and the Tenkan-sen. But interestingly, the Kijun-sen has turned flat. When that turns flat, price action tends to be attracted back towards it. So there is a very strong possibility of the market changing trend to the downside at the moment because of this flat Kijun-sen. So we do need to watch the low of that current candle, a very indecisive candle, and that indecisiveness with the market trading up and selling off, and the bulls and the bears being very indecisive about where they were going to close this market, and neither side closing in control, has set this market up for that potential change of trend. So the low becomes very important, and then the area around the 1172, 1173, 1171 intervening trough becomes important for completion of that pattern. Below there we have potential support set up at the Kijun-sen, which coincides with previous area of support and resistance around 1163, and down below there support down to that target at around 1150. So overall the market is looking very, very indecisive. We still do need to watch the highs of this potential pattern that's been set up, but good solid resistance here now around 1191, and then extending up to the highs of the pattern around 1195, and then certainly the round number 1200. If the market does take out 1200, that will be a very bullish sign. A close up above 1200 will be rather bullish. but bearish would be the close down below the intervening trough around 1172.